Friday, February 15th, 2019, Maneco 64, home of alternative economics and contrarian views. This morning I want to talk about GDP and how US GDP, in my opinion, is overvalued and artificially pumped up by government spending, by the budget deficit, and that it's actually not doing great. That's, of course, if, like me, you believe that government does not create wealth, it only redistributes wealth, it only extracts wealth from the private productive economy. And I will even show you that the US is not doing as well as countries like Germany, for example. Recently I saw a story that President Trump tweeted that the US economy was the kind of, I paraphrase it, he said it was the envy of the world. It was the gold standard of economies. But I will go through this and show you how it's not so. Before that, of course, let's look at what the markets are doing this morning. It's just gone past 7:30. Yesterday, of course, the stock markets did drop. They were lower, quite a bit lower early in the day. They rallied and then they faltered towards the end of the day. The Dow finished down 104 points, 0.4%. S&P finished down 7 or a quarter of a percent. The Nasdaq finished up on the day, but nominally. So let's see what we're doing right now. We've got spot gold at $13.1450, up about $2. Right on the highs here this morning. The low has been $13.11. Silver $15.60. It's virtually unchanged. The range has been $15.55 to $15.66. The Dow right now, the Dow future is down 155, 25,285. That's down 2/3%. S&P is down just over 0.5% or 15 points at 2729. Nasdaq 100 future is down 50 points or over 2/3%. So the Nasdaq is catching up with the rest of the market this morning. Currency-wise, we've seen the pound below 128. We're at 127.96, down 6 pips. The euro's at 112.80, down about 0.15%. And the dollar's down against the yen, 110.32, down 0.15 as well. Yesterday, the dollar got above 111, so it's come off quite a bit. Dollar yuan, dollar's stronger against the Chinese currency, 0.2 at 679. So it just goes to show you what I've said in the past. All these currencies, fiat currencies, are moving up and down against each other, taking turns. And it's just a huge distraction. Why I encourage people to not protect themselves by buying different fiat currencies, but by having real money, physical gold and silver, of course. Crude oil, pretty much where we were yesterday when I was doing my video, 54.75. The high has been above 55 overnight, though. And the bond markets. Well, the bond markets yesterday rallied. And why was that? Well, there's more signs here that the US economy is not doing well. In my opinion, the private economy is in a recession for all intents and purposes. Retail sales collapsed in December. They came out at, retail sales came out at down 1.2% month on month. It was expected to rise 0.1%. So that was the big number yesterday that led to the weakness in the stock market and the strength in the bond market. So the 10-year yield is now 265. Yesterday when I spoke, it was at 270, so it's dropped 5 basis points since then. The 1-year to 5-year spread is around 7 basis points. So the curve is inverted from yesterday, about 3 basis points. as I said then, yesterday the retail sale numbers were not great. We also had Atlanta Fed, which the Atlanta Federal Reserve Bank, they publish forecasts on economic statistics, and yesterday they revised their Q4 GDP data, Q4 to 2018, from around just above 2.5% to 1.5%. So, I was speaking earlier about how I think the U.S. economy is, for all intents and purposes, in a recession. Well, how can that be? You know, President Trump in the State of the Union said the economy is doing great. He's recently tweeted that the U.S. economy is the gold standard of all economies. Well, we need to look at the definition of GDP, or how they calculate GDP by expenditure. And you can see here GDP is the sum of consumption, investment, government spending, and net exports. Well, that's one thing I don't agree with, that they add government spending to the GDP. And why do they do that? Well, because it's a government statistic, and governments are statists. They believe that government, creates wealth. But in my opinion, that's a fallacy to add government spending there. So how does the deficit affect that? Well, if the government is spending way beyond what it takes in taxation, i.e. it's running a deficit, like the U.S. is running presently like a 5% of GDP deficit, that means that they're going to be spending 5% extra of GDP into the economy, either by borrowing. So if the U.S. government was running a balanced budget, you could argue that you could subtract 5% of the GDP number. So I've got here the Economist magazine, and this is the latest one. At the back of the magazine, they've got what they call economic and financial indicators for all the countries, the major countries in the world. Okay, and yesterday we also had GDP for Germany, and the headline was that Germany just barely avoids recession. Their GDP was 0.2% quarter on quarter for the fourth quarter. On the third quarter, they had a negative GDP, but you will see what I mean by how actually I think the German economy is doing better than the U.S. economy, at least the private sector. Because if you look here, the latest numbers for the fourth quarter GDP for the U.S. and 2018, the Economist has 3%, 3.4%, and 2.9% for 2018. So that's their estimate. I don't think these numbers have come out, the final numbers yet. So like the Atlanta Fed said, they expect revisions to like 1.5%. But then the interesting thing, you look at, there's a section here in the Economist called the budget balance, right here, you can see. And if I look at the US one, for 2018, the Economist has a budget balance of minus 3.8, so a deficit of 3.8%. So if you take the 2.9 estimate of GDP for 2018, and you take away 3.8%, because as I said, the government is spending 3% of GDP that it doesn't have, that didn't take in tax receipts. It's creating extra, spending through debt. Well, that gives you a real private sector GDP of minus 0.9. And then you go to Germany, right? And Economist is forecasting a GDP for 2018 for Germany of 1.4%. Well, and someone like Donald Trump will say, wow, look, our economy is doing much better than the German economy. But then you go to the budget balance for Germany, and it's actually a blue number. Economist uses pink and blue. Well, and it's 1.4%. Well, the German government is running a surplus of 1.4% of GDP. So that means that they're taxing the private economy 1.4% more than they really need. It means they could technically let the economy grow 1.4% more. So if you add that to the 1.4% GDP estimate, they're running, really, the private economy is running at almost 3%, while the US economy is negative. So you really have to go under the surface to look at when you look at these numbers. And that's why I think the US economy, if we didn't have all the, you know, the tax cuts we've had without the corresponding, how can I say, decrease in government spending, which has created a huge deficit. I think we're going to have 2-3 years of, you know, almost 5% budget deficits. And that's what's going to keep the economy from looking like it's in a recession. Is it really healthy? No. The other thing as well, once a recession really hits, and by that I mean a recession that the government statistics can't even hide, how will the fiscal policy be able to get the US out of that recession? It's going to be really hard. The US government is already, and Congress, they're already spending as if the US needed the help from a recession. So what about some other countries? Well, let's have a look at Switzerland, which is a country that doesn't run, you know, is quite not profligate. They're quite, their government doesn't really overspend. Well, they had a 2.6% GDP growth in 2018, and their budget balance is a surplus of 0.9%. So I would say the Swiss economy is doing really well. Let's have a look at Italy. Yeah, their GDP wasn't great, 0.9%, less than 1%, but their budget balance, it is a deficit of 1.9%, but if you subtract that from 0.9, they're running like minus 1% GDP, so it's almost like the US, which is minus 0.9. So there you go. Is the US economy doing really well? Is the GDP, well, you know, the private sector GDP really growing? No, it's all a facade, and it doesn't matter what president it is. Of course, the president, whoever it is, be it Trump, Obama, Clinton, Bush, they will use these statistics to their advantage. You shouldn't be fooled by it, you know, because there's a lot of things they can do to keep these numbers going for a while. If you enjoyed this video, make sure you hit the like button. Make sure if you're not a subscriber yet and you're going to subscribe, that you hit the notification button. Also, if you think you were a subscriber, be careful. I heard from some of my viewers that YouTube is unsubscribing people from my channel. I'm not sure if that's happening. You can also follow me on Steemit, DTube, and on Twitter. And before I go, don't forget also to share this video far and wide. I wish you all a great day. Take care. Bye.